Good morning.
Good morning.
Good morning.
A lot of folks to get back in. We got the email out a little, and then we will get rocking.
Okay.
Hope everybody had a phenomenal weekend. And your week is off to a great start. Everybody just getting in. We're giving folks a couple more minutes to hop in, and then we will get started. Apologize for the delay this morning. All right. We will get started. We're 3 minutes after. Good morning, good afternoon, good evening, wherever you are in the world. I am your host, Ryan Carthage. I hope everybody had a great weekend and your week is off to a phenomenal start. Just before we get started, as usual, right? Turn off all distractions, prepare your minds and your bodies to engage. And if you're not actively making a comment or a question or asking a question, please be sure to stay muted. All right. Quick disclaimer, trading does have risk. Right? We're not CTAs, commodity trading advisors. Therefore, the information that we give is for educational purposes only. We can teach about the technicals, we can teach about the fundamentals, we can teach about everything all the way down to the trades that we like to take. But at the end of the day, it is up to you to place the trade, to push the button. So we just want to make sure that we all remember to trade responsibly and never risk any money that you cannot afford to lose. All right. So real quick for new folks that may watch this on the recording, be sure that you're going into the training, going through the training step by step. Post all of your questions and your homework assignments into the community within the inner circle, and then bring your questions to the live sessions. We did our best to make sure that everything was simple and easy to use so that everybody can follow. And there are some recent posts in there from the weekend that we do owe you some follow-up on, and we will get that to you today. We'll get that to you today. And yeah, I'm excited about this morning. I am. My original plan was to clear out my charts and start over. As I told you guys, every month I start fresh. But I wanted to actually look at some of the setups that we had from last week, and look at the progress of those. And then tomorrow I'll have fresh charts for us to move through. You guys good with that plan?
Yes, sir.
All good?
Benny, good morning, brother.
Good morning, sir. You doing good?
Yes, sir. How about yourself?
Doing great. Can't complain.
Awesome. All right. So while I'm switching over to my other screen, if you guys have any pairs that you want me to take a look at, if we have some time at the end, I will run through those. I will have to hop off at like 8:15. Today is Logan's first day of first grade, so it'll be a fun day. So
Awesome.
let me switch over real quick. But if you have any pairs you want to take a look at, drop those into the chat as I am switching over. All right. All right. So first, before I hop into the charts, take a look really quickly. Pound dollar. Gotcha, Michelle. GA and GJ. Before we hop into the charts, just really quick, wanted to hop over into trading economics. Couple articles here that kind of caught my eye, right? China exports beat expectations. That one caught my eye. Australia holds rates and sticks to the tapering plan. And then iron ore falls to 9-month low, right? So that is a signal that they kept the rates the same. And Benny, correct me if I'm wrong on this, right? But kept the rates the same. So that could impact the currency negatively. And then the iron ore falls to a 9-month low, which also would impact the currency negatively. The Eurozone revised their Q2 GDP growth higher to 2.2%, which would be good for the currency there. And then crude oil remains near $69. Concerns over low supply in the United States were offset by fears of slowing demand. And then I sent Benny an article yesterday, but there was an oil spill caused by the hurricane that they failed to discuss. So that's something that could be playing around in the background as well. So just some articles there for you guys to take a look at and read through, and we can see how those impact the currencies there. And then quick look at Forex Factory. It has some Aussie rate statement, right, which we said they kept it the same. And then economic sentiment here, which fell a little low for Germany. Yeah, Germany. So a little negative news for the euro there. So it was kind of mixed this morning for them. And then later on in the week, we have some Canadian news. Bank of Canada rate statement, monetary policy report hearing for the pound. Bank of Canada speaker, press conference for the Euro Central Bank, and then some more Canadian news on unemployment rates later on in the week, and then US PPI month over month. Okay, so things to watch out for. New folks, take a look at these, click on these folders, take a look at them, kind of get some insight on what they mean, and then we will be able to see how they impact the markets. All right. So let's hop through. So the first one I got up here is the Aussie CAD. Right, we're looking at. Let's go back to the daily real quick. We've been tracking this one on both sides. Right. This is the active, the capital AB boundary here, right? And we're tracking this up retracement zone to the downside. We got a nice 61.8 retracement originally, but price rejected off of this monthly resistance and has been moving to the downside. So on this, in this up retracement zone, right, on these sub fibs of the move, we saw that we had an 80-20 scenario here, right? We only got a 23.6 retracement and price rejected off of the trend line and pushed deeper, okay? And with that push deeper, we then got a stall out right here before the 618 extension. And then price reversed and broke this trend line, okay? So still potential 80-20 scenario here on the daily time frame, okay? Potential coming back up to this 38.2 retracement level. So with that, we copied this fib, right? We copied that fib and we took it down to the 1 hour time frame. Okay. And that's this fib here. Okay. Just so we can see it from a larger perspective. But then because we had price lingering down here and we got this reversal and a break of that trend line, we wanted to map the fibs, these sub fibs, these smaller waves back to the upside. Okay. And so what we did, right? We just came to the bottom of this move, right? And tracked the fibs to the upside. And we saw that we had this 80-20 scenario here, right? Sub fib back to the upside after a break of the trend line. So what this tells us is potential reversal, right? So we got shallow retracement, price pushed up to the 118, 127 zone. Then came back, gave us another shallow retracement, pushed up again. Right, pushed up again to the 118, 127 zone. Gave us a nice double top here, right? This was last night. Yep, at midnight, right? Pushed up and then started to make its way back to the downside. So currently still tracking, right? This for a retracement here, okay? On that break of the daily trend line right here, right? We haven't gotten a retest of that yet or a pullback at all. So nice strong move to the upside, right? With very little, if any, retracement, right? The Aussie was pretty strong last week for the past couple of weeks, right? And that push to the upside. And so now we're looking for a retracement back to at least give some relief. And we'll see if we get a reversal back to the upside from there, okay? But this is one that we were tracking, right? And we're starting to get this move to the downside. We're still lingering here at the B boundary after this consolidation, but this move could be working its way back to the downside as the Aussie starts to weaken a little bit. Now, the Canadian dollar with oil is in a little bit of flux as well, but we could be looking for this retracement here, right? Which things started to move in our favor. Okay. So we're still looking for price to come back down to some of these lower levels, retest that trend line potentially, and then we could look for a reversal back to the upside. Okay. So that's where we are on the Aussie CAD. Did anybody stay in this one? Did anybody take this one?
I'm in it.
I'm
with
still
the,
in it.
Yep,
Awesome.
I'm in it with the Aussie dollar, Aussie yen.
Yeah, Aussie dollar, Aussie yen. Yep. I missed the
I've been
Aussie dollar.
hanging out.
Haven't you been hanging out? Awesome.
Yep.
I'm in it as well.
Great work. Great work, Ken. Great work. Cool deal. So that's the Aussie CAD, right? So let's take a look at the Aussie Swiss franc. Okay, this is another, right? This is the capital AB boundary here to the left, right? And we've been tracking this one to the downside. We got a nice deep 786 retracement on this move here, right? So on the, we call these the sub fibs to the downside in this up retracement zone, right? We were tracking these as well. This was the active AB boundary to the downside. And then as price pushed up extremely strong, took out that A, right? And we know when we get these A's taken out, right, we tend to see a nice retracement when that occurs. Okay. So take this out, right? So if we drop down to the 1 hour time frame and take a look at how this works, right? We'll see these were the, right? So these fibs we took from this highest point here, right? This last impulsive move to the downside, rejection off the trend line, okay? And this is the AB boundary that was taken out from this move to the upside, right? So we track the move to the upside with the fibs, okay? I don't know why that gets mixed up all the time. There we go. So another one, right? So that A got taken out, right? So we start from the bottom and work our way to the top in the direction in which the fibs took the A out, right? In the direction in which the market took the A out. So here we had another 80-20 setup, all right? We got shallow retracement. Price pushed up to the 118, 127 zone, right? Double top there. Now price is making its way to the downside, right? And if we draw our trend lines on that from the bottom to the top, you got a nice break of the inner trend line off of the top as well. So there. And the inner trend line would have looked like, technically that would have been the highest point like that, right? Yeah, technically that's the wick of the highest point there. Okay. But nice move to the downside, 80-20 play. All right. So almost at 23% retracement, right? Just shy of TP1, but got a break of the trend line. Now it's retesting that. Could get a pullback and then looking for a continuation to the downside there. Okay. Another nice setup with this also, right? So as things start to shift, and we'll talk about this more throughout the week. But we mentioned that generally kickoff of the fall, right? The volume starts to come back to the market. So everything that we've been doing throughout the summer has been generally in the slow months, right? So as we move back into the fall, volume tends to pick up, right? So we'll see a lot of these moves play out a little bit faster, but we'll also start to see some trends start to pick up as well. So that'll be something for us to keep our eye on, and we'll talk about this more as we move throughout the month. But as we look at this, and as things start to shift, right? So with the Aussie weakening, we'll take a look at a couple dollar pairs in a little bit, right? But dollar picking up some steam, right? We saw it was retracing last week, and now we're getting a move back to the upside. So dollars gaining strength. Swiss franc here picking up some strength, right? So could be looking at a shift in our sentiment, right? New Zealand yen, there's another one that is moving potentially to the downside, right? And that's another indicator of potential risk off sentiment. So something to keep an eye on, right, as things continue to shift and as we move into this fall time frame. Okay. But right, so this is the Aussie Swiss franc to the downside, potential pullback here, and then looking for a continuation to the downside. Okay, so that was another one from last week that that's in motion. It's in motion. Okay.
Hey, Ryan.
Benny, what's happening?
Hey, man. Isn't it amazing how the technicals kind of just fit the fundamental narrative that you were reading about today? And that's a kind of plays into the question that Ebony asked last week.
Yeah.
In regards to the fundamentals and the technicals, right? So just last week, the Aussie pairs were on a tear. Now you're getting some relief at key technical levels, But when you look at what's happening fundamentally with the price of iron ore, the Royal Bank of New Zealand decided to hold their interest rates, right? Hold their rates that came through late last night. And you can kind of see the narrative playing out on the charts at the key levels.
Yep. It's it's amazing, man. It's absolutely amazing. It all fits together. It all fits together. Yep, exactly, Ebony. Interesting. Interesting. But when we talk about the fibs, right, it puts us in position for those U-turn points, right? These 80-20 scenarios, the 118, 127, that B boundary, right? And your retracement levels. It all fits in, right? And then we look at support and resistance levels. It all plays into the same thing, right? So puts us in prime position to really take advantage of everything that's happening, really at any given moment. It's a beautiful thing, man. It's a beautiful thing. So new people, definitely be sure that you're going through the training, because it will help you to get a full understanding of each piece of the methodology that we use and why we use it, right? To break down everything for you. And remember, right, we got a post over the weekend or an email from someone saying that they're new and nothing was making sense. When you're learning new things, you're not going to understand it from the very beginning, right? It's going to be new. It's going to take some time for you to see it, hear it, and understand it, right? So coming to these live sessions, you get a full view, right? Educational teaching method called whole part whole, right? These live sessions give you the whole view of everything that we're doing, going back into the training curriculum that breaks it down into step by step for you, right? And then you can come back to these live sessions, see the full picture again, and then ask specific questions based on what you saw in the training and what you see us doing on the charts, right? So if you follow a step by step and then bring your questions to the table, we'll be able to answer those for you, okay? But understand that you're learning a new skill. It's not a get rich quick thing. It's gonna take time to learn. But if you're willing to put in the time and the effort and go step by step by step by step by step, the pieces will start to come together. They will start to come together. But you got to put in the time and the effort and really, really, really focus on going through that training so that we can get things in place for you. Okay. Fee, you got a question?
Hi, yeah, I've got a question. Sorry, I'm in a little bit unnoisy place. I wanted to join today. You explaining, the way you explained that the market will come down, because I'm getting confused with this. I understand it, but my mind has not let go the old way I've been doing it. So according to what you have done now, are you looking at the market will come down to retrace the lowest point and then go back up to find the D extension?
Yep. So, right, we talked about. So
no, just where you are, yeah.
Yep. So I'm going to get to that because I want to get you the full picture, right? So we had this fib that we were tracing, right? We were tracking this fib in the retracement back to the upside, right? And so we got the B boundary that formed here, and then we got this pullback that occurred. Well, this move back to the upside took out this A, right?
Okay.
So what that is a signal of is a change in momentum and a change in direction, right?
Yeah.
Because the fib got taken out. So now we're looking at a move back to the upside potentially.
Yeah.
And so generally when that occurs, when this A gets taken out, generally we see, right, a retracement because the market moves in waves, right?
Mm-hmm.
Moves in waves. So this was a wave to the downside. This was a wave to the upside. Now we're looking for a retracement or a pullback, right?
Yeah.
But also in line with with some of the fundamental activity that's happening, right? The Aussie dollar is weakening because the interest rate stayed the same, right? And iron ore prices are decreasing. So that all plays into a retracement occurring. So this wave back to the downside, and we'll see how far that goes, right? But this is a retracement that's happening because we got to a high point, right? A level of resistance, and we broke a previous level, right? So now we're looking for a pullback to occur, right? So we're tracking the fibs now from the bottom to the top since
Okay.
this fib got taken out. So in this uptrend here, you had an AB boundary that formed, right? When we get this B boundary, that's our bat signal, right? A potential reversal coming. And so that's what
Yeah. Hello?
we're,
Yeah.
right? So when these AB boundary forms, we look for reversal. And then we'll play it to the downside, right? Take profit 1, take profit 2, take profit 3.
Yeah.
And then we'll see if the market gives a reversal back to the upside or if it continues down, right? That's not, so we like to play it to these levels, and then we'll see what the market gives us, right?
Okay. Cool.
We'll see what the
Okay.
market gives us at that point.
All right. I'm getting confused there, but I'm in a really noisy place, so I'll have a
Yep.
look at the video again. Yeah, I'll speak to you on Thursday.
So what part are you getting confused on? The fib levels
Because
here?
if I'm looking at that, I'm thinking he hasn't found the D extension. Has he found the D extension yet?
It has not, but has it given you a retracement to one of these deeper retracement
One of
levels,
deeper ones. Okay. All right.
right? So if
So
the market
it'll
moves
come-
up, it's
it'll-
going to come down.
So we come back to the deepest we can find, and then we go back up to find the D extension, isn't it?
Potentially, yes.
Okay. All right.
Potentially,
Cool.
yes.
All right. Thank
Okay.
you.
Yeah, absolutely. So the market is going to get, the majority of the time, the market likes to find a C, right? So you got your A, you got your B. Now we're looking
Yeah.
for
Let's
Now we're
see.
looking for our C,
Yeah.
right? And once it finds that C,
Yeah.
then we'll be able to, right,
Okay. Go back
then
and find
measure
them.
our D.
Okay. Cool. All right. Thank
Okay.
you.
You're welcome.
Yep. Thank you.
You're welcome. Bo asked the question, can one re-enter on the pullback? Yes, you could, right? You could just monitor it and make sure your risk management is in place, right? Wait for the pullback to occur. Could come back to retest some of these previous levels that it broke outside of this consolidation here, right? And then to move to the downside, right? So these, when I talk about scaling into a trade, right, and having multiple entries into a trade, wait for those pullbacks in the high point, right? And once we get a new boundary to form, and you could drop down to the 15-minute to do this as well, right? But we could get a sub fib to pull back here, and that will be an opportunity to re-enter back to the downside if it gives you a deeper retracement here. So that is potentially an opportunity, yes. You just want to be cognizant of those smaller waves, and they could not, right, go give you the deepest pullback into the sweet spot. Okay. All right, so that's the Aussie Swiss franc.
Hey, Ryan, I got a question for you.
What's happening? Was this Ken? What's happening?
Yeah. Okay, so I think you kind of answered it for me, but for those pullbacks, if you wanted to get, like if you're scaling in, you wanted to add a little bit more.
Yeah.
Let's say, you took some profit and then you got a pullback and you wanted to add some more. Is there a way, I think you just did it by the sub fib, but is there a way to kind of figure out where to put in a limit order in just in case you kind of miss it?
Yep, absolutely. So one of two things, right? You can wait for, right, this B boundary to form down here, right? Wait for two candles to the right to form off of this low, and then drop your fib on the 1 hour time frame, or you can come down to the 15, right? You can come down to the 15, and you can track the smaller waves from here, right? AB boundary, shallow retracement, 80-20, right? So now you can look for retracement up into your sweet spot on the 15-minute time frame.
Oh, cool. Okay.
Right. So if price comes back, right, 6218, 786 level here, right? Then you can look for that reentry off the smaller waves here. Right. I like to sit on the 1 hour time frame and wait on it, right? It works out similarly, but I like to see it here just for my visual and my comfort, right? And see that deep retracement come off of the 1 hour time frame, which in this scenario, it'll be close to the same. But that's just my preference on that, right? So it'll be a little bit lower, right? So that's the 618 on the 1 hour time frame won't be as deep as on the 15-minute, right? So you could get some play within that range. So you can do either way on that.
Okay. Thank you.
You're welcome. Any other questions? All right, cool deal.
I have a question, Ryan.
Yo, what's happening?
I heard you earlier when you said that when the what is it? What am I saying? The word when the New Zealand yen is going down, it's representing a risk-off situation. Why is that?
That's just one of the indicators, right? So the New Zealand dollar is a commodity currency, and the yen is a safe haven currency.
But that's not the only pair that shows that, right? I just want to.
No, it's not. But
Okay.
Benny, correct me if I'm wrong on this one, but it's one that isn't in conflict, right? Because you have the Aussie and the Canadian dollar are commodity currencies. The dollar yen, right? The dollar can be seen as a safe haven or a more of a risk on, right? So it flip flops. So that being
Correct.
tied with the yen can give you some indecision there, right? So the New Zealand dollar and the yen are two that are kind of opposite, right? With the commodity and a safe haven. So being able to look at those to then track the sentiment is easier and more defined, if you will, than looking at some that might be paired with other currencies that could give you a little bit of indecision, even like the CAD yen.
And
Okay.
then just remember, that's just one indicator, right? That's
Correct.
just a
Right.
piece. That's just a piece of the puzzle.
What's the side I'm looking for, Benny? My mind just went blank.
FX Street.
Oh, the risk on
Yep.
sentiment from
Let's start with
FX
that.
Street.
There we go. Yep. All right. So the FX Street here, right? And these are some of the indicators that you can take a look at. And this breaks it down from multiple perspectives, right? From the stock market, and right from the currency perspective as well, right? And
I
then
got that website. I was driving. I was like, wait, I heard something. I heard you say that. I'm like, hold
Yep.
up, I need to run that back. So
Yep,
got
absolutely,
it. Thank
absolutely. You're welcome. And then remember too, right? When the United States stock market is moving up, right? That's a signal of risk on. And then when it's pulling back, right? Money's potentially coming out of the market, right? Signal of risk off, right? Which would mean the dollar, right? The DXY will be moving the opposite direction of the stock market. So stock market going up, dollar down, and then flip flop, right? Stock market down, dollar then moves up. Not a 1-to-1, but it moves pretty closely in an inverse correlation. Okay.
Hey, Coach.
What's happening, Shauna?
Good morning. I got a question. So back to that website, which indicator do we pay attention to? Or we gotta, you know what I mean?
So you can read through all of them, right? So like I said, it gives you a perspective from the stock market and from currency. So this is the New Zealand yen that I was speaking of, right? And then if you look at right, so the VIX, right? If it's in risk on, a lot of times with the VIX, that gives you the perspective of the stock market. So if the VIX is down, right, then we're in a risk on scenario. If the VIX is up, then it's in a risk on scenario for the stock market, So as this number shifts, right, you'll be able to see it from a stock market perspective, right? And that will give you kind of the inverse correlation I talked about for the currency, right? So we see here the VIX is moving up, right? So if the VIX is moving up, VIX is up, risk off, right? So money is coming out of the stock market, right? So if we're in a risk off scenario, we see the dollar pick up some strength. Make sense?
Yes, thank you.
You're absolutely welcome. Right. So you can read through these and gives you multiple perspectives, right? So a full view from the stock market perspective and from give you just a fuller view from the currency perspective as well. So if you're able to see that and look at some of these different pieces, you can see it from a broader perspective.
I appreciate the comparison to the stock market. So stock market up, dollar down, and vice versa. Got
Correct.
it.
Correct.
Thank you.
You're welcome. All right. Cool deal. We'll kick through a few more of these. So Aussie yen, right? Aussie yen, same thing, right? Been tracking this up retracement zone, right? We got to 50%, rejected off of a daily support level, right? This is our capital fib that we've been tracking, right? This red line is the 61.8 retracement level. Price pushed up, right? We did get a 38.2 retracement, right? But now price is pushing, or was pushing higher, right? Came just short of a 50% retracement off of this active fib here. So if we drop down to the 1, right? Track the fibs from the top of this move to the bottom, right? And we see another scenario where the A got taken out, right? So we saw this move here, AB boundary formed, 80-20 scenario, price started making its way to the upside, took out the A, formed a new AB boundary, 80-20 scenario. Took out the A. We know we tend to see longer retracements when that occurs. And so here we are. Right? So we map the fibs from the bottom to the top on this. Right? AB boundary, shallow retracement, 118 and 127 zone. We got the consolidation. Then price broke to the downside. Right? So now we're looking for this one also, right, to continue down. Okay. So another play from last week that is starting to move in our favor. Okay. So that's the Aussie yen. So I can pull them back a little bit, but we'll track it and see how it goes. Aussie dollar. Same thing, right? Same thing. AB boundary, capital on the daily time frame. On this one, we did get a 61.8 retracement. Price rejected off, right? So on this up retracement zone, take these out. In this up retracement zone, right? Price pushed up on this AB boundary, broke that down trend line. Oh, did it? Hold on. Maybe not. Nope. My apologies. Rejected off of, right? Came just shy of that trend line right there. Okay. But on this AB boundary, we got a 61.8 retracement, right? 61.8 retracement didn't get to the 786. 61.8 retracement. So could see if this move continues, right? Could see push down to the D extension. We'll see. But if we go down to the 1 hour, right? Again, we track the fibs from, we have some consolidation here. So from the last rejection off of the trend line to the downside, right? This was the last AB boundary, 80-20 play for the long. A got taken out. AB boundary formed. AB boundary forms. 80-20 scenario. Price moving back to the downside. right? So same thing, right? Same thing. The Aussie pairs doing the same thing, right? Similar looks. Okay. Any questions on these? No. All right. Let's I don't think we talked about these last week, but let's look at the CAD yen. Right. The yen being a safe haven currency, Canadian dollar being tied tightly to oil, right? And being a commodity currency. So, right, capital AB boundary here. We've been tracking this one to the downside, right? Still haven't gotten this 38 to retracement just yet, right? So in this up retracement zone, right, we map the fibs from the top to the bottom. This is our active AB boundary in that up retracement zone. We got a 786 retracement here. It did break the inner trend line, but rejected off of this outer trend line. Okay. Rejected off of the outer trend line. So 786 retracement on this daily fib here, right? And now price gave us a reversal. Now potentially looking to make its way down to this daily 38.2 level. Okay. So if we take this down to the 1, right, and we track the fibs from the top to the bottom, right? This one got taken out here. So we tracked it from this point, right, to the downside. And then from this point also. Right, that gave us this move here. This is our active AB boundary on the 1 hour time frame, right? So if we move these, surely look at the active AB boundary, right? We got a retracement up into our sweet spot. Up into our sweet spot. 786 didn't quite get to the 86 level, right? We drop our trend line on it, and price is starting to move in our favor. Right? Price is starting to move in our favor. Okay. Now, if you wanted to track the smaller waves on that just to see where price is, right, you can drop the fibs from the bottom to the top. You got a deep retracement on this, right? The price came up again to this level here on the active fib, right? Stalled in the 118 to 127 zone here, which is at your 786, almost your 86 retracement on the active fib, right? So this would be the stronger, most dominant move, right? Now we're getting this reversal, right? Right in line with, right? These are retracement levels on the fib. So, I mean, these are resistance levels, support and resistance levels, right? And like Benny said, right in time with oil still hovering at its lows, and they have concerns about supply, right? Starting to move away from that Canadian dollar, right, in favor of the Japanese yen, right? So we got a break of that trend line. Price is pushing to the downside. So we'll track this one and see where it finishes out, but still have this destination here, this daily 30 at 2 level, which is 330-ish pips away. Okay. But it's another opportunity in play. Okay. Any questions on the CAD yen? No. All right. One second, guys. All right. We had, take a look at the pounds. We had a couple requests there. Pound Aussie. Okay. This one we've been tracking, right? We had this 80-20 play here, right? AB boundary, 118, 127 on the daily time frame. Price pushed down. Beautiful move, right? 38.2, 50% came just shy of the 61.8, came just shy of that TP2 level, right? And then we're starting to get reversal. We didn't get a pullback off this, right? So I drew that fib in. Let's track it from the daily, right? Up retracement zone, right? Up retracement, right? So AB boundary formed here. The extension was hit just shy of that 38.2 level, but the momentum took it down, right? Continued driving. So now, right, once this candle closes, if it closes higher, this will give us our new AB boundary, right? So give us our new AB boundary. Okay. And we're looking for this retracement back to the upside. Okay. But how we got there, so that's the daily perspective. How we got there is on this 1 hour time frame, right? We zoom out, we look at this move, right? We track the fibs from the top of this move to the bottom, right? We got this new AB boundary that formed. We got this new AB boundary that formed, right? We got a shallow retracement. Price pushed down, 118 and 127 zone, right? Now the Aussie in this one is a counter currency, right? But an inverse look, right? 80-20 play, double bottom, right? Double bottom instead of a double top. Price reversed, right? So this is another one that we were tracking. Saw the AB boundary form. So look for the reversal. Didn't hit that D extension. Got the rejection. Price moved up. Now we're getting a pullback. Okay. So we'll see if this continues up to our TP1, TP2 levels, right? We'll see how far it goes. And once that AB boundary forms on the daily time frame, right? We could have some higher levels to track from this perspective, right? If this closes higher, AB boundary, we'll see how it plays out. Okay, but we could have some higher levels to track potentially off of this daily fib, right? That being TP2, and this potentially being TP1. Okay, so we'll watch that. We'll take a look at this one tomorrow morning, see where it's at, and see what we could be looking at. Okay. That's that TP2. I'm sorry, this is the TP2 and this is the TP1. So we'll see. We'll see. But that one's in motion.
Hey, Coach, could you go over what you said about the daily? You said we have to track higher levels.
Yeah. So, right. So looking at that daily fib, right? If this candle closes higher, right, in this range, we'll get a new AB boundary here. Right.
Oh, I got what you're saying. Yep.
And so then we could look at the TP levels off of this AB boundary on the daily time frame.
So you're saying it could be another 80-20 on that one, the new fit?
Maybe not, right? Because with the Aussie getting weak, we could see this pullback just continue going.
Yeah,
right?
yeah, that's what I meant.
Yep. And so this 618 retracement level, right in line with that trend line as well as a retest. So we could see that. We could see this retracement just continue moving.
If we get past that daily resistance.
Yep. If we get past that daily resistance, absolutely. All right.
Got it. Thanks, Coach.
And then if we get this move to the upside, right, it could be in line for a potential crown pattern as well, if that move to the upside continues. Right, if we get this move higher, deep retracement, right, we could see that potentially, because we broke that lower level, and now we're getting a pullback. So we'll see. We shall see. Ron, good morning, sir. All right.
Morning.
So that's where we are. That's where we are with the pound Aussie. Okay. Any questions on that one? But In motion. In motion. Take a look at the pound yen. Another one we've been tracking to the downside, right? Still looking for this daily 38.2 level off of this capital fib here. Okay. Still tracking to the downside. AB boundary. We got the 61.8 retracement here. Rejection off of the trend line. Pushed down. Came back. Rejected off the trend line a second time. Right. Rejected off the trend line a second time. So up retracement zone, we're still looking, right? This D extension level didn't get to 786. So this is the D extension level that we're tracking, which is right in line with that daily 38.2 level. Okay. So if we go down to the 1 hour time frame, right? This was that double top there. So if we track the fibs from the top to the bottom, this was the active AB boundary on that 1 hour time frame. Okay. Some folks played this retracement move back up to the top, right? 6-1-8 retracement off of this active fib. Okay. And now we're getting a reversal, right? Price came right into our sweet spot. Right into our sweet spot. These are the sub fibs on this move, right? Those that played it back to the upside. This was the AB boundary. We got a 6-1-8 retracement. Price came just shy of that level. Yeah, maybe like a pip or two short, right? But for all intents and purposes, it hit that, and then we got that rejection, right? So price is now moving back to the downside, okay? Moving back to the downside. So again, we're tracking this one down to this daily 38.2 level, right? We still haven't gotten that retracement. So that's what we're looking for on this one, which is still 800 pips away, right? So we got another 800 pips to the downside. So we'll continue watching this one, right? We'll continue watching this one to the downside, and we'll play the ABCD waves back down, okay? This was a beautiful setup, right? Right into the sweet spot. We got the consolidation, and then we got the break of the trend line and a retest, right? Broke down, retest, and now she's pushing down. Okay. Any questions on the pound yen? No?
Hey, Ryan.
Benny, what's up, man?
Hey, man. Just want to add the importance of, while we do the higher time frame analysis and then we work it down to the lower time frame and take advantage of the moves. If you look at currencies, right, for the most part, they're one big, huge range, right? Because we're dealing with currencies. Whereas you don't get so much with currencies. Well, you'll see some of it, now that we're in the fall in September, and like Ryan said, the liquidity returns to the market. So you may get some of those trends, but you don't see the long, like if you look at the stock market, you look at the NASDAQ, you look at, if you trade indices, the US 30, things like that, those long runs, like if you look at some of those stocks, those indices, things like that, some of them since 2008, since the crash, have just been going straight up, right? Where you pretty much could just buy the dips, especially with the Feds, the way they've been propping up the market, for so long with money and capital. But so if you see how that long, like it's just been a long, run. Whereas with currencies, right, not so much. You get a trend, and then you're not trending. So this is why we teach it the way that we teach it, where we take that overall view, but then it sets us up to get the plays on the smaller time frames, utilizing the Fibonacci sequence, because you're not going to get a 10-year run to the upside, right? We've been in the bull market for, how long has this been? I know it's a record, right? It's been a long time. So,
yeah.
A long time, right? Record breaking. But you're not going to so much see that with currencies. Currencies tend to bounce around in a larger overall range, right? So that's why we do this. So that's why we
2015.
Yeah. So this is why we set ourselves up the way we do, and we keep ourselves in that if then syntax, right? I used to be the same type of trader where it's like, well, I thought. I don't think anything anymore, right? I take a look at my fundamentals, I take a look at my technicals, and then I set it up, I set my risk management, and I execute the trade, right? Because we look at things in more of a series of trades and not just one trade, not just putting everything on that one trade. Everything is in a series of trades, right? Is how we look at earning our money over time, right? So everything is not going to hinge on one trade. Everything doesn't just hinge on one time frame because of the way these currencies, the way they bounce around. So we've got the long-term overall view, and then we look at the lower time frames, and we play what we see.
Mm-hmm. We play what we see.
Hey, Ryan.
Ron, what's up?
Hey, good morning, guys and gals. Got a question. I have a pretty good handle on psychology and the skill set. I'm good in those two areas. But what I'm struggling and trying to get a good grip on is the fundamental part. And what I mean by that is last week I got hit major with news, especially coming out 9:30, 10 o'clock in the morning. But when I checked on Forex Factory last night, there were news coming out at 12:30 a.m. on AU. And I was in some AU pairs, but that news did not affect the AU pairs. Can you explain that? Or give me a better enlightening?
Ben, you want to take that one?
Yeah, it did. It did affect the pairs. They pushed up last night, but it was only a temporary reaction to the market. So the RBNZ came out with that bank rate statement, and whereas everybody was wondering, are they going to continue with their tapering? Are they possibly going to raise interest rates, knowing that they're dealing with everything that they've been dealing with in regards to COVID? So some people were thinking, hey, maybe they'll even lower them. Maybe they'll increase their buying of assets. Whereas a lot of economies around the world are talking about tapering. They decided to hold everything where it was. So it's a very, very important report and a very, very important decision. But the decision they made didn't have a crazy impact on the market. It pushed the market up. The Aussie strengthened for a quick minute, right? And then it continued on, on its downtrend once the rest of the world started to wake up and see what the decision was. So it just continued along its technical path, right? To the downside. Like you see that spike on that chart, that Aussie CAD, if you go back, right? It spiked right up to that level. What is that, 93.48 last night? Yeah, you see that move? So the market reacted to it. You see that long wick? It reacted, and then it just continued right along the technical path. So there was a reaction to that news last night.
So would there be times where the news won't affect the market at all in general?
Effect depends on the type of trader you are. Like if you're if you're a scalper, that wick could have messed you up if you were trading at that time. Or if you're a scalper, you're smart enough to know that there's news, so you're not playing that. Right? That's the ideal situation. If you're a swing trader, right, you're naturally trading at smaller lot sizes and looking to scale into a trade. So for those larger events where it might move the market 100 pips or so like that, you typically, depending on where you have your stop as a swing trader, you're probably going to absorb that, right? You're gonna be able to absorb that. So the answer to that question is it depends on what type of trader you are, right? So if you're a swing trader, an announcement comes out and it causes a 50 to 60 pip move in the market, you may look at that as, well, it didn't affect the market at all. Whereas if I'm a scalper and I'm trading on the 15 and the 5 minute, absolutely it had an effect on the market.
Correct. Okay.
So it just all depends on the type of trader that you are.
Okay.
Yep.
Okay. I am what you guys are teaching, so that makes me a swing trader.
Absolutely.
All right. Thanks, guys.
You're welcome.
Yeah, Michelle said, depending on your analysis, someone I know is like, I've been buying since COVID. Yeah. So Michelle, what those folks do is, like Benny said, they buy the dips, right? And depending on what side of it you're on, if you're just buying those dips, at some point, you can get hit hard. I told you guys about the Casey and I were working with some folks that trade stocks, and they wanted to buy dips too, right? And on Tesla, they wanted to buy the dip at $800. And we told them, based on this Fibonacci sequence, price is going to drop to 600-ish. Don't buy this dip. You want to sell at the top. They bought the dip, lost thousands because he was sure it was going to keep riding, right? So the Fibonacci sequence is powerful and puts you in proper positions. And yes, depending on your analysis, you can continue to buy the dip, but at some point, right, that retracement, that wave back to the downside, it's going to hit you, right? So, yeah,
right. You just with currency lifetimes, you just see more frequent, corrections that tend to be, a little bit more larger and more significant, right? I mean, in our lifetime, we just you could have bought oil at zero and you still can be buying oil.
Yes.
Right. You know what I mean? You could have been long from the pound from the time of COVID. But those we got hit with a once in 100-year pandemic. You know what I mean? So there are certain situations where you get set up for that, right? With a lot of those pairs, you can go up to a weekly, you can go up to a monthly chart, and you can see exactly, right, in 2020 where a lot of these pairs bottomed out because of the pandemic, right? So on the currency, where it's usually what I'm saying is that it's usually an impactful event that'll push something one way to where it bottoms out like that, and then it continues, to the upside. Whereas you're looking from 08, what is this, 2021? You're looking at a 13-year bull run in the stock market that continues to be propped up by the Feds printing money and buying assets, right? So that's why they're talking about tapering now. That's why Wall Street's keeping a close eye on that, right? Because they know they can continue to take risks because the Feds are providing the floor for them. That's why you keep seeing these record highs going up, and everybody's like, man, this is insane, right? To where a lot of people think, man, when that euphoria state, at some point that correction is going to come, and that's why everybody's paying attention to interest rates and paying attention to what's going on globally around the world, right? And then, somebody Ebony Ricks pop, like eventually you're gonna get that corrected. So you saw, look at when we had a last major correction on that, right? Where it dipped off, right? And then it's been straight up from that. You see way more corrections than that when you're looking at currencies, right? Because of the way the fundamental news cycles run, the way they run, right, on a monthly basis and everything. But so just something to keep an eye on and pay attention to, just the subtle differences between the asset classes.
Yep. 100%. 100%. All right, so that was we left off on a pound yen here, right? Getting a pullback now. Potentially coming back to retest some of this consolidation. Then we'll be looking at a potential continuation to the downside. Okay. Take a look at the pound dollar, and then I do have to hop off to get Logan ready for school. But pound dollar, right? AB boundary here, right? We're tracking this daily 38.2 level again, right? Tracking that daily 38.2 level again. Another level of support there. This is that up retracement zone. This is the active AB boundary, right? We got to push up. 618 retracement. Didn't get to the 786. Tried to push above that trend line. And then we got a rejection and broke back below it. Right, so price is now pushing back to the downside. Okay, again, still looking for this daily 38.2 level. Okay, so if we take that to the 1, right, what we did was we copied that AB boundary off of the daily time frame, right? This fib here, we copied it, brought it down to the 1 hour to track it from a higher level perspective, okay? And that's that trend line, that downtrend line. So this is what we got. I'm gonna take this out, right? And then we map the fibs from this low point, from the B, right, to the upside, right? Just to track the overall move. Look at this. AB boundary, right? We originally got a break of the trend line here, and then price came back up, retested the trend line way up here, right? Almost at that daily resistance level, but 618 retracement. And then look, just fell off a cliff. Just fell off a cliff, right? All in the sequence. AB boundary formed, done. Right, so now we're on the move back to the downside. That D extension level is just shy of that daily 38.2. I mean, just a little bit deeper than that daily 38.2 level, okay? So we're tracking this back to the downside now, right? Right in line with our overall bias, which was short, right? Price pushed up into our sweet spot on this active fib here from the daily time frame. And there she goes. Okay, so now we're short on this. We're short on that. All right, so the trend line to see when the highest point when it broke, right? Should have been here. That's to the highest point. So that would have been your trend line break. You could have gotten more aggressive on the 15-minute time frame. It brought one up like that. All right, those are your correct and active trend lines here. Okay. But that's a beautiful move to the downside. Beautiful move to the downside. Yeah. Good work, Michelle. Thanks, Ebony. Real quick, on those dollar pairs. Look at dollar CAD real quick. We'll just look at the 1 hour time frame, right? We're tracking this move. We're tracking this move here, right? This was the fib that we brought down from the daily time frame, right? Got a deep 8.6 retracement off of this, right? And then we also brought the smaller waves in to see where price was. We got almost a 618 retracement. Price didn't quite get down to the D extension level, but we got this reversal back to the upside, right? And that's what we're looking to see if we would get, okay? And we did. And we did. All right. Beautiful move to the upside. All right, so as the dollar is gaining strength, so is price moving to the upside on this dollar CAD. Okay. So check out those dollar pairs, right? And check out the Canadian crosses, right? Because oil, right, continuing to struggle to get above that $69 a barrel level, right? Those pairs could be going in the opposite direction. Okay. So Euro CAD, real quick, Canadian dollar pair, right? Been tracking this one. It's off the 1 hour time frame. This was the move last week, right? Push down, deep retracement, almost at the 786, double bottom, push back to the upside. Right? So
Desi said oil is dropping.
Uh-huh. Yep. She's on it, man. She's on it. But that's what we got today, good people. Just an overview. I'll have these charts cleaned up with some fresh markups for you guys in the morning. And be ready for Benny's session tonight. Benny has some of the conversations at the end of the week were phenomenal between Benny and I. So he definitely has some phenomenal things to bring to you guys this evening. And we'll be able to get an update on some of these moves as well. All right. So happy Tuesday. You guys have a phenomenal day. Donna said, so wait for a swing low to form and buy on GU. my bias on GU is short, done that. My bias on GU is short, so I'm only looking for selling opportunities on that. If you want to buy it, you could off of a sub fib, right? Sub fib AB boundary, but my bias is short on this one to the downside. So I wouldn't buy. I'm looking for price adjustment to come down to this daily 38.2 level. So I'm looking short. But you guys have a phenomenal day. Come back with us tonight, 9 p.m. With Benny, and be prepared. Be prepared. All right. Benny, you got anything for a closeout, man?
No, sir. Go get that little girl ready for school.
Yes, sir. All right, everybody. You guys have a phenomenal day, and we will catch you guys tonight at 9.
Peace, guys.